Welcome to the story of Indraprastha Medical Corporation Limited, the company that runs Apollo Hospitals, Saridavahar, Delhi, a name that's been saving lives for 25 years, and now silently creating wealth on the stock market. Let's rewind to 1996. India was transforming, the economy opening up, private healthcare emerging from the shadows. Amidst this change, a joint venture between Apollo Hospitals Enterprise Limited and the government of Delhi, called Indraprastha Medical, was formed. Apollo brought in world-class medical expertise. The Delhi government brought land, policy support, and a mission to provide affordable healthcare for all. The result was the formation of Indraprastha Apollo Hospital, one of India's largest private hospitals, with over 700 beds, 52 medical departments, and the country's first successful liver transplant. Now, let's understand what makes Indraprastha Medical's business model so fascinating. Their revenue model is simple yet powerful. Inpatient services, which includes major surgeries, intensive care, and specialized treatments. Outpatient consultations, over 3,000 patients walk in daily. Diagnostics and laboratory services, this is a source of steady, recurring income. Pharmacy and allied services, an additional layer of profitability. And here's the magic, the operating leverage is massive. Once fixed costs like staff salaries and infrastructure are covered, every additional rupee of revenue flows straight to profit. That's why Indraprastha's EBITDA margins hover around 17 to 19%, comparable to leading healthcare chains like Fortis. Now coming to the financials of Indraprastha Medical. Sales and profits of the company has more than doubled in the last 5 years, from 613.38 crores to Rs 1,356.36 crores. Likewise, profit margins has also increased from below 1% in the year 2021 to 11.87% in the year 2025. Indraprastha Medical has a positive operating cash flow, and it has been generating positive free cash flows as well for last 5 years, which shows that the earnings of the company are of good quality and are backed by cash flows. Now coming to the balance sheet, Indraprastha Medical is a zero-debt company, and its share capital has remained the same for last 5 years, which shows that the company is growing its business without raising any capital, which is positive sign for the shareholders of the company. Also, the receivable days and the inventory days of the company is under control, and the cash conversion cycle of the company is only 20 days.
Yay!
Which shows that the company has an asset-light business model. Indraprastha Medical's return on capital employed has been increasing for the last 5 years, and currently it's around 41%. Now we will look into the valuation multiples of Indraprastha Medical and try to judge whether it offers any margin of safety to investors. Indraprastha Medical's current PE is 30.40, which is lower than its peers in the hospital sector. Its price to sales is 3.7, and EV to EBITDA is nearly 21, which is still much lower than the ratios of comparable peers like Fortis Healthcare, Max Healthcare Institute, and Global Health. The growth of Indraprastha Medical is due to the direction provided by its high-quality management team, led by Pratap Reddy, who is also the founder-chairman of Apollo Hospitals Group. This long-term association with the Apollo Group, one of India's largest hospital networks, ensures that the management gets continuous access to Apollo's best practices, medical technology, and training frameworks. The promoter shareholding of Indraprastha Medical is 51% with no pledged shares. FIIs hold 2.4% stake and DIIs hold 3.5% stake in the company. The company has no significant related party transactions or any regulatory penalties or audit qualifications in recent years. Their board of directors meet regularly with strong attendance. The board of directors of Indraprastha Medical is a fascinating blend. On one side, you have the Apollo Group leadership, the Reddy family, with decades of healthcare and business experience. On the other, you have seasoned independent directors, bureaucrats, policy experts, and business leaders who bring governance credibility. This mix gives investors comfort that Indraprastha Medical is a professionally managed company and not family-dominated or politically driven. Indraprastha Medical is a company suitable for investing by conservative, long-term investors who are not willing to take large risks to earn big returns from the stock market. As always, investors should consult their financial advisor before investing in the shares of any company.